Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is the director of Coupel Advisory Corp and has been on the board of multiple mining companies, Dr. Nicole Adshead-Bell. Nikki, thanks for joining us.
Ivan, thank you very much for having me.
Yeah, it's an absolute pleasure having you on. Now, Nikki, the main thing a lot of investors are wondering right now are what metals are going to do good long term, and what are some of the metals that you think have the best potential?
Sure, I would describe myself as a global metals bull. Almost any commodity, we're in this structural issue of declining supply and an environment where it's getting tougher and tougher and tougher, whatever commodity you're looking at, to bring on new production. And then you're offsetting that against demand that is either at the very base case is stagnant, but are more likely going up in many ways. And so this theme that we're going to touch on today of net zero, this is ESG thematic, the battery metal space, obviously everybody is talking about that. And we've seen lithium and lithium stocks perform incredibly well over the last couple of years. I would say, though, that last year on the subject, ironically, coal was the best performing commodity. And so coal is also not going the way of the dodo, because I think we have this, whether or not you want to call it an uneducated elite about what happens with respect to mining and products of mining, is that people just don't know where their stuff comes from. And my sister, I say this story to everybody, my sister who's a cultural anthropologist, and so obviously not necessarily leaning towards the mining sector. And she said it the best. She said, you can choose to be a vegan, but you can't choose not to be associated with the products of mining. And so we have this incredible mismatch with people who are anti-mining. Everyone you speak to who's not in our industry will be negative about mining. And that's juxtaposed against every aspect of our life is linked to mining. So for me, I mean, my favorite commodity is copper right now. I've drunk the Kool-Aid on copper. As someone I know who runs a copper company said that copper is the new lithium, which I thought was hilarious. It is.
I heard you're a gold bull too. Is that true?
Yes. I spent a number of years working for a precious metals fund, and if you're in mining, you can't help but love gold. So
Of course.
I am exposed to gold. I'm always exposed to gold. It's a core and soft spot deep within my heart. I think the issue that gold faces a little bit as we're seeing these capital inflows into the mining sector is it's hard to message it around that ESG thematic, and everybody is really focused on ESG and net zero, et cetera. And so gold companies have to step up to the plate and I think message their business better than what they're doing. And if we look at something like the World Gold Council, leading advocate for the sector, I mean, I don't think they do a great job. I think they should be hiring some millennials that understand how to talk to younger people, not just the older, those of us that are much older that love this thing called gold, of which I would say most of the investing population doesn't really understand or appreciate.
Right. So, Nikki, now, what about silver? It's both a monetary metal, and of course, it's used in a lot of industrial metal. What's your outlook there for silver in the green revolution?
Yeah, so yes, I'm exposed to silver. Silver is gold on steroids, as we know. I think that silver actually has a little bit easier time of messaging its thesis. So ultimately, you want the widest array of investing communities attracted to you, your company, and your commodity. And so the silver companies, if they're smart about it, can message themselves both as an investment as a hedge against inflation, all those good things that silver investors like, but it's also used obviously in solar panels. It's got a very heavy industrial element. And sometimes when people say, look, I want to be exposed to gold for the unique qualities that it has, they have been less interested in silver. Silver's kind of been this betwixt and between commodity. And I think it's now silver's time to shine, no pun intended, is that it hits a number of different investment themes. And
right.
Really the broader your audience, the better it is at the end of the day.
And now let's talk about trends with electric vehicles. By 2035, a lot of countries are coming out and banning the sale of gas-powered vehicles. Do you believe this will actually happen, or is this just crazy?
Crazy.
There's other words for it.
Yeah, I'm Australian. I will try and not to swear. Look, it's complete, absolute bollocks. It's a very Western world elite view, because obviously, if you have elite vehicles growing, production elite vehicles expanding at the rate that everybody's predicted, and don't get me wrong, we'll be seeing that move. But the problem is you have to have everything that comes with that. They're a lot more expensive. I mean, the average person is suffering incredibly at the moment due to inflation and due to cost of living pressures. So EVs are expensive, then you have all of the add-on infrastructure that needs to occur, and obviously it has a big impact on electricity demand. And ironically, you've seen California come out and demand that people try not to charge during peak hours because they simply do not have enough electricity production. And I think what we've going on around the world at the moment is this insanity of voluntarily making our cost of living more expensive. And really that's around energy. And one of the reasons why our species, billions have been lifted out of poverty. We have seen an increase in net wealth generation over the last 100 years. That's because we've had cheap energy. And we're now deciding to move away from cheap energy. And if you look at developing world countries, for example, most of their electricity mix is still fossil fuels, the same in Australia, ironically, despite the fact that Australian Queensland government whacked on a massive royalty on coal producers. And so you have this mismatch between reality and understanding of, and this push towards net zero. And I think we're seeing now that express, whether it's in Europe and obviously massive increase in energy and energy costs. We've seen that it's probably not good to be completely reliant on another country for your source of energy. And this move to net zero has proven to be somewhat self-defeating, I think, at the moment. And so it's how do you, of course, everybody should be environmentally aware. How do you reduce your environmental impact, but do that in a way that makes sense? It's not voluntarily increasing your cost of living in a very, very material way.
Now, Nikki, you're aware of all the declining ore grades and all these metals like copper. And Elon Musk has recently tweeted, we don't need dramatic increases in copper supply to basically meet the green energy goals. Do you agree with Elon?
Nope. Not at all.
Why is that?
He's a very intelligent man and an expert in very many things and has reached the pinnacles of success that I never will, but I think I understand something about mining, having spent 27 years in this sector. You identified it perfectly. Over the last 10 years, copper grades have declined from 0.75% average copper grade to mined to less than 0.5% today. So you need to have more mines come online just to maintain production. And if we want to talk about critical commodities, and everybody's rabbiting on about lithium, the key critical commodity of them all, in fact, the basis of life as we know it, and the basis of electrification, it's copper. And so without copper, you can have as much lithium as you like, but if you don't have copper, you ain't having no lithium batteries that are supplying EV cars going forward. And so I am absolutely astonished that people aren't talking about copper more dramatically. And I look at it, and copper is doing quite well, but the incentive prices for copper, for new copper production to come online, have to be materially higher than where they are today. And every single pundit in the world sees this dramatic drop off in copper from 2025. It's material. And we're in this highly inflationary environment. So people are not building, not expanding, they're not building. You had Glencore's CEO, one of the largest primary copper producers in the world, come out. And I actually think this shows real leadership, came out and said, we are not bringing any more copper online until the market is screaming for it. And the market is screaming for it when you see it expressed in the underlying commodity price. Now, touching back to the lithium side of things, lithium increased 9-fold within 2 years. And obviously that incentivized a huge amount of investment in the sector, enthusiasm for the commodity. You've seen new production rapidly come online, but you had to have that tenor of price rise to result in a increase in primary supply. And uniquely in mining, you have this inelastic supply response to demand because you simply cannot bring on new mines quickly. And the average timeline now from discovery to the production is 20 years. And so I think the smart money, and I'm not saying I'm the smart money, but I have absolutely drunk the Kool-Aid on copper. You have this perfect storm of a structural shortfall of a commodity that's irreplaceable, right? Absolutely irreplaceable. Now we could argue about the hydrogen fuel economy, supplanting some of the lithium on the battery side and the build out and hydrogen fuel cells and all of those good things and different types of batteries that may or may not increase in market share. And my personal belief is we'll probably end up having a mix over time, whether it's hydrogen fuel cells, whether it's lithium batteries, etc. But copper is the baseline. So I think copper is exceptionally interesting right now. And I'm exposed to it and I will continue to be exposed to it. And I think that It's when nobody is interested in a commodity. Obviously, that's the time to buy. Buffett said it best: when everybody else is looking at something like lithium, go back to what everyone is looking at. You just got this perfect structural deficit. And sorry, can't bring copper online quickly. And so obviously respect Elon Musk for absolutely everything he's done, but think he's very wrong on this particular point.
So Nikki, right now copper is in the low $4 area, and at the all-time high it was around the $5 area a pound. Do you have a price range copper needs to be before Glencore or the people really need to start caring?
Yes, it is out there. I mean, it's aggressive, between 6 and 8, and I publicly said 8. And what you need that spike. I mean, we saw it in lithium. You need the suppliers of capital. So that's us. It's the retail investors. It's the institutional investors. It's the debt providers. They need to be comfortable that they're going to get a return on their investment. Given this inflationary environment that we see and these big capex projects, they're multi-billion-dollar projects to bring on material supply. Nobody is putting serious money to work at the current copper price. So therefore, for new production to come online to meet that very, very substantial gap that starts in 2025, the incentive price needs to go higher. I mean, we've seen this in lithium. I mean, I think lithium is the perfect playbook of what you need to see happen in the copper sector. So I think even $5, people are starting to get interested. I don't think you're going to see people make material decisions. $6 to $8 is where I think people will start pulling the trigger on a big capex decision. And interestingly enough, Glencore, if you go and look at their latest presentation, they had this fantastic stat that's showing in 2025, expansionary capital for copper, so new copper or expanding your existing production, is forecast to be, based on public information today, 65% less than it was in 2012. That's a startling. Nobody is putting money into these things. Price has to go up. Simple law of economics.
Is there a supply cliff coming? Like, if nothing changes, how much copper supply declines in the coming years?
Yeah, 2025 is a cliff. You look at any information, whether it's S&P, and this is all publicly available, just go searching for it. Based on operating mines today, there is a plus 4 million starting between 2020 and the next 5 years, a 5 million ton, thereabout, decline in copper production. So that's a very, very material decline. And so what the forecasters do, they'll go and then overlay, okay, this is what people have committed to, and this is what's potential, and this is what's maybe further potential. And even if you layer all of those elements, the potential production, the more out there production, you're still seeing a production profile that is going down.
Right.
And in my experience, what happens with forecasters is a lot of these guys are economic guys. So they're relying on companies providing their information. They're not going into that information provisioning and critically looking at it. And if you look at forecasts on almost any commodity over time, everybody is always aggressive because companies are aggressive. They feel like they need to feed the marketing beasts. Right. Very few companies under promise and over deliver, although that's a secret sauce. And so it's kind of a scary picture. I've been trying to think of a way that I could hoard copper, but you need to have a lot of space.
Yeah, you need to have a ridiculous amount of space.
Yeah, I haven't figured it out yet, but no, it's of a concern. And then you look at this US government, I think this is shocking, is on one hand, they're saying that they're going to incentivize and encourage homegrown critical commodities, of which copper is one. And then on the other hand, in the last month, the federal government changed land designation for Antofagasta's Twin Metals project. It's gone. So that's not advancing. They spend some material, be a material copper producer. They put plus $450 million into the ground already. And obviously we all saw the news about Pebble, and there's been some controversy on that. So on one hand, you have a government saying, we want to incentivize new production. And then on the other hand, absolutely stopping its ability to go forward. And I think it's a very interesting mismatch in terms of what I say versus what I do from a government's perspective.
So, Nikki, the huge geopolitical conflict is, of course, Russia and Ukraine. How does that play into all of these commodities?
I think what the Russia-Ukraine conflict has viscerally demonstrated, and obviously we shouldn't have had to have this happen and to have this demonstration, is how much commodities matter and where those commodities come from matter. And so that has massive implications in terms of security of supply energy. I mean, that was a very visceral one. Most palladium production comes out of Russia. It's a very big nickel supplier. It's a big gold supplier. It's a big oil supplier, etc. And so I think the interesting shift for that is finally governments are waking up to the fact that this stuff matters. And so you are seeing, I don't think you've seen this have a positive impact on ease of permitting yet, but at least you've had an acknowledgement that mining matters, that commodities matter, that security of supply matters. And so almost every government has come out and said, we've got a critical supply list of minerals, and they're all the same. They're all searching for the same ones. But that's yet to play out into increasing production on the ground. But I do think you have this interesting overlay thematic where governments are realizing that this is an issue. Sometimes though, when they realize things are an issue, there can be a move to nationalization. And this is always the great fear, because you can't move your widget factory. But there's been very, very few instances of true nationalization in mining. And at the end of the day, these governments, they don't want to pay for it. These are big dollars. They want the investing community to pay for it, but they're definitely going to be sticking their oar in as to who owns the company, who owns the deposits. You've seen Canada come out quite a bit of overreach in the lithium space with 3 juniors, a couple of which don't even have projects in Canada, demanding that those juniors that have some Chinese share ownership, that those Chinese investors exit because they consider them to be quasi entities, and so quasi government entities. And so you're having an incredible government overreach as well. And I think it's somewhat ironic, because if you look at copper, for example, yes, Chile is the largest copper producer. Yes, Peru is the second largest, but guess what? Most of the copper in the world gets refined. It's in and it's smelted. It's in China. So you might be producing this stuff, but China has taken this incredibly long-term view about security of supply of commodities, but also ensuring that they're involved in controlling that supply in terms of vertical integration with smelting and refining capacity. So I think there's going to be a really interesting way to play this sector over the next 3 to 4 years. I suppose my predominant thesis is commodity prices have to rise, but there's also a whole bunch of risks that are going to come along with that. And how do you mitigate against those risks?
So Nikki, can you give the audience an idea or a suggestion that basically fits your overall investment thesis in this sector?
Sure. So I'm very biased. I'm a chairman of an Australian company, Australian primary listing, but it's also listed in Canada, secondary listing, called Hot Chili. There's a very material copper development project in low elevation Chile, so a much, much lower economic hurdle than some of the other things that we've seen. They have a very large resource, so you're going to have a huge amount of beta to the movement to the underlying commodity price. But what they also have is a team that's got a proven history of getting deals done in Chile and adding a lot of value through the exploration drill bit. And in fact, have recently brought in another project that's contiguous with their main deposits and have an active 10,000 meter drill program. And so that growth element that those of us that are in the junior sector love, it's got the potential talk of that. And so I've been buying in the market. And I love the junior sector. Obviously, if you want to play copper, you can go to all the majors. They'll just move up and down with the commodity price. Another one that I think is a really interesting one that I'm also exposed to is Amerigo. So it is not an exploration company. In fact, they very proudly say that they don't hire exploration. They don't hire any geologists. As a geologist, I'm slightly hurt by that, but nonetheless, what it is a tailings reprocessing company that's also in Chile. And so very undervalued, very strong balance sheet, very, very good dividend. So if you want a lower risk way to play copper, that is, I think, relatively undervalued, that will talk dramatically in rising copper price, it's one. And we've seen this really big move in moly just recently, and suddenly all of these investors are going, how do we play moly? How do we play moly? And so fortunately for Hot Chili's got a pretty sizable moly credit and gold, but so does Amerigo. So it hits those key benchmarks as well. And so I suppose I like the juniors. I like things that can have torque to an underlying commodity. I will play larger companies more from a trading mechanism. And so those are two that I like.
Well, Nikki, we want to first of all say thank you so much for coming down to Wall Street Silver. This is your first time, and hopefully we can have you back on in the next 2 to 3 months.
That would be great. And if you don't offer the choice for me to come back on, I might have to start stalking you to come back on.
No worries. We'll invite you back on. Talk to you soon, Nikki.
Thank you very much.